Welcome to this week's Nebraska Soybean Board Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoff. I am Steve White, KRVN Farm Director. Joining us on the program today, we have Jim McCormick and Brian Splitt. They're joining us from eggmarket.net. Guys, it has been a week, ups, downs, a lot of movement. Real quick, just give me your one quick headline takeaway from the last 7 days.
Volatility. I think that is probably the key word of the week, the month, even the year, Steve. I mean, there's just a lot of volatility in the market right now. Planting progress is going quite well across the vast majority of the Midwest. So we have trades focusing on the weather. Then on top of it, we did have the new trade deal with Britain, or at least a framework, I should say. And then we've got some more positivity or some optimism. Maybe there's a trade deal with Chinese over the weekend. And then more importantly, we got a big WASDE report coming in May. And this report's always a big one because it is the first balance sheet of the 25-26 marketing year. So there's a very wide range of guesses of ending stocks, which sets us up for an incredibly volatile move potentially once those numbers are released on Monday morning.
It's a lot to talk about. That's just a preview. We'll have more of their thoughts in just a moment. But first, a word from the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to our weekly market roundup. We've got Jim McCormick and Brian Splitt joining us from eggmarket.net. We got an overview of all that happened in the last 7 days. Let's dive more into one of those topics. It was probably the bright spot in the week. One of the things we can hang our hat on, some positive momentum in the trade front. Framework at least announced for a deal with the UK, the British sending more ethanol, but some beef and other protein products, hopefully as well. What have we learned from this? What do we think could be coming down the pike with the UK here?
Well, it does offer up the idea that maybe we get some more ethanol to the UK. They are the second buyer behind Canada. I think their total volume is about a third of what Canada buys, so it's second by quite a far margin. The conversation as far as whether we can get U.S. beef to the UK has a lot to do with agreements on, the more of the idea of hormones and how we raise beef and versus their regulations. So I think it just sets the tempo that maybe the administration is trying to get some things worked out. I think we got to a point early in the month of April where there was a lot of things happening. The stock market was crashing, the bond market was crashing, and I think somebody, probably more than one person, said, hey, listen, we got to get some things going here. Otherwise, this thing could really unravel itself really fast. So we're at the table now negotiating whether this framework is really a major step. I think it just shows willingness from the administration to get some deals done. So I think the market's taking that as a positive step now that we're going to be meeting with the Chinese over the weekend. We have soybean futures, at least, to finish the week, relatively strong. And we've had bean futures trading, in the last 3 weeks in a trading range and at the upper end of the range recently, while we've seen corn break 40 cents over 3 weeks, really since the day before Good Friday. And hard red wheat has broke about 50 cents since the same day. So soybeans have performed very well. And we've got some optimism heading into the weekend that maybe something good will come out of the meeting with China.
Getting back to this UK deal, you never know how much we read into this one. Is this kind of set a framework for how the Trump administration might approach other countries, or is this just kind of a one-off? And how much do you think we can read into what direction this might be signaling for other deals with other countries?
Well, I think you kind of view it as at least a framework, or kind of what is their phrase, what they're looking at, Steve. But I think something that's kind of interesting to look at is, for the most part, they've got a base tariff rate of 10% of all goods coming in the United States. And what's interesting is Britain is one of the few countries that we actually had a trade surplus with, which means we were selling more goods to Britain or the UK than we were bringing back in, and we still hit them with a 10% tariff. So that shows me that is the Trump administration's baseline, that they're going to go no lower than 10% tariff on anything coming to the U.S. And, that's the country that was, like I said, we were selling more goods to. What does that mean for like Vietnam and China, who've been selling a lot more goods to us than we sell to them? Is that going to stick? Is that going to make them want to stick their tariff maybe closer to 20, 25, 30%? There's talk today that President Trump threw out an 80% tariff. But the fact of the matter is those tariffs are a tax on the consumer of that product. A 10% tariff, 20%, it is going to put a damper on the U.S. economy, I believe.
We are right here on the Nebraska Soybean Board Weekly Market Roundup, brought to you by the Nebraska Soybean Farmers and their checkoff. We've got Jim McCormick and Brian Splitt joining us from AgMarket.net. And Jim, you were just talking about that. One way to look at a tariff, it's a tax, and it's a tax on folks, a lot of whom are living paycheck to paycheck. Does that then start to affect their buying power as they're going to the supermarket? I was just at the supermarket the other day. People were looking pretty closely at those 10-pound chubs of ground beef, deciding which one do I buy. Does this all start to impact some of those kind of buying decisions just at that supermarket level?
It should. I mean, the reality is it is a consumption tax in all purposes. I mean, if you're going to buy the product, you're going to pay a tax. You pay a sales tax, now there'll be a consumption tax. And right now, the big problem we have in the United States is we are to the brink for a lot of people. The latest study I saw, a survey said 74% of Americans are living paycheck to paycheck. So now you throw in a 10, 20, 15, 20% tax, whatever that may be, to buy that product, be it a stroller, be it a toy, be it a baseball bat for your son or daughter, you're going to have to come up with a way, to offset that cost. And that could be a little bit negative on the beef front or the livestock front or anything, essentially, because people got to make economic choices unless their bosses give them a 20, 30% pay raise. And if they would do that, then what would that do? That'll just fuel inflation even higher. So we're really kind of a catch-22, but it could be a little bit negative income. Like I said, if these tariffs do come on, somebody's got to pay them. And traditionally, it gets pushed back to the buyer.
You talked about buying baseball bats for your kids. I don't want to hear that. I've got 3 in Little League right now. But you also mentioned earlier China talks going on. What are we going to be looking for there?
Well, I think there's going to be headlines coming out of the weekend, regardless of what the outcome is, and it's going to be spun positive or negative. I think you're very likely to see some type of a sharp move on the open based on what those headlines are. We'll likely get an idea of what it looks like to start by equity trade. So on Sunday night, the equity futures, your Dow futures, your S&P futures, the NASDAQ futures will open up at 5 o'clock Central Time. We'll also get the gold market, the silver market, and the energy markets to open up at that point. So we're going to have a sense of how the macro look of that outcome of the meeting is prior to the grain open at 7. I would say that, if we have a strong feeling one way or the other, talks go really well or talks go very poorly, we could see, very, very likely a gap on Sunday night just to at least start the session. But that whole conversation will then be overlooked several hours later as we get to the WASDE report and then see how the balance sheet looks. So one of the things we alluded to at the beginning of the conversation was the idea of volatility recently. And we have all the workings of quite a volatile day to come out of the weekend on Monday.
Absolutely.
Hey, Steve,
you mentioned it already.
I was going to say, one thing I would make note for people who are expecting a big deal coming out of the weekend. In the trade war 1.0, I believe there were 13 separate meetings before President Trump and Xi actually set a deal over a 2-year period. So the reality is, this is probably more of a thawing of relations than actually getting anywhere close to even a framework like we've got with Britain. Now, hopefully that's not what happens and we can make some headway. But the reality is, the listeners, I think we got to be really, realize the history is, trade tariffs are or trade talks are very tenuous and happen over years and not hours.
Yeah, I think that's a great point. I wouldn't expect any deal to be announced yet this weekend. We've hinted at it. WASDE, the world look at supply and demand. Why is this time of year, why is that May report such an important one?
Well, May is important because we're getting to the back end of our old crop supplies. We'll get another revision to old crop demand. We believe that we'll see a revision higher on corn for export, just again, based on the continued pace of sales versus where the USDA has our target for the marketing year. But this is also the first official look at the new crop balance sheet. So we know USDA is likely to use the trendline yield from the February Outlook Forum. They will use the planted acres from the planting intentions report that we had in March. And the one variable that we don't know is how they assess demand. generally with a large production year, which this will be for corn, because again, on paper, we're using trendline yield to start, which is higher, number one, than we've ever actually grown. Number two, it's a very big acreage year. So that would tend to lead to a large demand number. The caveat to that would be, it's already been stated that they will be looking at trade policy as a potential influence on their demand assessments for new crop. And also, you'd think back to last year, the USDA really underestimated export demand for corn, and Mexico still has this drought. So when you think about where the USDA was back in May a year ago for the old crop, we saw just a string of month after month after month of increases to corn for export. So it's going to really set the stage of kind of what the parameters are that we're working with for carryout as we get into the weather conversation over the next 30 to 60 days.
We're down to our last minute or so here, but real quick, just as a guy is putting seed in the ground today and they're thinking about marketing this year's crop, what are maybe a couple of 2-3 things that they should be thinking about in terms of, are they going to see some opportunities maybe to put pencil to paper and hopefully make a little money?
Well, I think you get, like I said, when they get out of the field, get everything planted, I would reevaluate your costs and come up where you can make money. And then, we believe the odds are high. Historically, the odds are high that we will get a rally. But you need to make those decisions now, because if summer rallies tend to be very, very emotional, they tend to be very, very fast. So you need to be prepared to pull that trigger. So my argument is, get the numbers ready and get the orders working. What are your thoughts, Brian?
Yeah, I think you got to do a little bit of planning and have an idea of how much of your production you want to have delivered out of the field, what you want to allocate towards storage, and just really be diligent about marketing those bushels in the next 30 to 60 days. This is likely, history would show that May, June, July is really the time of year that we have the highest amount of marketing year peaks or highs for the year. And I think you got to make sure that you have some price points in mind and just not leave it up to the fog of war when the market's trading very fast up and down and we're volatile. And a lot of times the market makes the highs right at the height of the bullishness. So just get everything set up here so that you have a sound plan moving forward here in the next 30 to 60 days.
Well, thanks so much today to Brian Splitt and Jim McCormick from AgMarket.net. As a reminder, commodity futures and options involve a substantial risk of loss that is not suitable for all investors. And that is this week's Weekly Market Roundup. I'm Steve White, and the Market Roundup brought to you by the Nebraska soybean farmers and their checkoff.